You're listening to WKDW Radio 97.5 and KDWRadio.com, broadcasting from the Bishop West Real Estate Mobile Tower right here in sunny, partly cloudy, sunny, rainy Northport, Florida on a Friday. So I got that all out because, guys, we've been in this little lull with the storms in and out today. I think we're going to battle them all weekend, off and on, but we could certainly use the rain. Just remember, and no, ironically, I'm talking to an insurance guy today. So remember, when you're on the roads on 75, keep it under 80. And especially oil and water don't mix. And we haven't had rain for a while. So those roads are going to be slick. So take your time getting home and don't end up in a hospital somewhere or putting someone else in harm's way. So just remember that as you're driving home tonight. I've got a very special friend and guest in the house, Mr. Justin Box at Hardin Insurance Group. How you doing, Justin?
I'm doing great. I'm glad to be here.
So, we got some really interesting stuff coming up. So the listeners that are chiming in right now on Facebook, YouTube, and all these other social media platforms, and you're on the radio, there's some really dynamic changes and some really, I think, fascinating information that you're going to learn today that is going on in the market. And I'm going to kind of ask him a really poignant question right off the bat. And, we've had some roofing issues. We've had some things happening in legislation. Let's just take a step back and go into the side of it where the roofs are being replaced now, even if they're 20 plus years old, they're filing claims. Can you explain what's going on there?
Yeah, so there's a number of things happening. I guess the biggest problem is wind damage being fabricated by roofers who are coming around doing a quote unquote free roof inspection because, again, quote unquote, homes in your neighborhood were damaged by the windstorms and insurance companies are paying to replace the roofs. Some homeowners, I suspect, kind of understand something fishy's going on. Some of them maybe think, oh, well, shoot, Dan, I don't know, I didn't know I had wind damage, and yeah, let's do it. And so that's kind of the tip of the iceberg as to what's going on there, but it's causing a lot of roofs to get replaced by the insurance companies that really were just at the end of their lives and about time for them to be replaced by the homeowner because wear and tear is not covered on an insurance policy. So if your roof just wears out over time, your insurance policy is not going to cover that, just like your tires wear out over time or your water heater may give out after a certain number of years or your AC failing and stuff like that. But for insurance to cover, there has to be a direct physical loss. So the wind has to blow it away, lightning has to strike it, fire has to burn it, something extraordinary occurred, and you'll always hear them say direct physical loss. It's not wear and tear over time. So that's what we're running into right now, and it's really exaggerating the amount of claims that are going on out there.
So we all know right now, like there are 20, 25, 30, 50-year roofs out there when you talk metal. But when you're talking a 20, let's just make it an even 20-year roof. The normal everyday average Joe knows that their roof is guaranteed for 20 years. Hashtag, well, not really 20 years, but it's a 20-year roof. That means that really in the Florida sunshine, it starts to deteriorate probably about the year 10 to 12 because of the heat we have. And we start to get some gravel loss, some granule loss on the shingles. And usually by year 17, insurance companies back in the day, didn't they at year 17 start to really pay attention more? And then we're talking, 8-10 years ago now, not recent. So we can kind of walk into some history here. Go ahead and explain it old school to new school.
Yeah, absolutely. Historically, and it didn't matter if you had the 30-year shingle or whatever in the Florida sun, the data showed that around 20 was really about the timeline that they needed to be replaced, give or take. So your typical underwriting guidelines traditionally would be, we'll take up to 20 years on a shingle roof. Some companies were more particular where they would say, we'll take up to 15 on a 3-tab shingle, which is the older flat looking style, versus we'll go up to 20 on an architectural shingle, which is the more, the old 3-tab looks like a brick wall, it's real organized pattern. The architecturals looks thicker and looks kind of 3D. Sometimes you'll hear them called 3D shingles back in the day. But yeah, traditionally 20 years is what they would go on those. Right now, 10 years is really all they're wanting to go, some less, some a little bit more, because that's where they're running into the problems. After 10 years in the Florida sun, they've deteriorated enough and they're brittle enough that wind damage can be much more easily fabricated and manufactured, and then they can force the insurance company to pay for something that wasn't even a loss. So the insurance companies are steering clear of that because they're literally going out of business because these claims are getting so dire. And I can kind of elaborate on that, John, if you want me to kind of give a history of how we got to where we are.
I want to kind of hit this because the truth of the matter is, and this is a direct hit to the consumer. Yes. While all of this is going on, end result of this, and I'm going to let you elaborate on all of it, but the end result of the behavior that's happening right now is, I know for a fact, and in talking with you earlier, and you can back me up, we're losing insurance carriers, which is ultimately going to change the rates for everyone else down the road. And we wanted an insurance platform where we have a lot of competition. Well, if you eliminate the competition with all the fraudulent behavior, I always say you can follow the money. Well, if the money's going out, there's insurance carriers that are going to stick around through and be able to make it through the whole thing. But the end result of that is they're going to find a way to capture it back, and our rates are going to go up and our coverage is going to go down. And that 20-year shingle is going to be adjusted to that 10-year. And then, because aren't they working on these things now in legislation?
Yes. So there's a special session happening right now. I'm not exactly sure what's going on inside those walls, but I'm optimistic that, they've obviously realized this is becoming a big problem. You're seeing more and more articles with data like what you're seeing on your screen come out just over the last 18 to 24 months. It's just snowballing out of control, and it's putting insurers out of business. Citizens is onboarding record numbers of people. That's your indicator that something's going on, something's wrong in the private market. Citizens is our state-run insurance company of last resort. So if you can't get into a private company, or if all the private companies' premiums are astronomically high, you can go to Citizens. You get kind of substandard coverage in there, typically limited coverage options, but sometimes they're radically less expensive.
Oh, you just faded. You just faded out. Justin, you just faded out. Let's see if he can dial back in, but you might have to check out and then come back in. Justin, go ahead and log out.
Can you hear me now?
Yep,
whenever my phone rings, it mutes my headset for a second, and I don't know how to stop it from doing that. So sorry.
The beauty is that we're interactive with work. That's the grace of the show. So I can always cover if it blanks out. But Citizens, you were talking about Citizens being a substandard company, and while all that's happening in the marketplace, sometimes it's the only option. And I know you're kind of waiting on your phone to come back, but it's always a chance to really look at the substandard coverage in comparison to the standard coverage. And we've worked with Citizens as real estate agents in the past, and while Citizens is a great opportunity to get some coverage and maybe get you into a home, it's not the expectation when something actually occurs, because when it occurs, you need that other policy that has a window of opportunity much greater than Citizens coverage does. But I know that Justin, when he comes back, is going to talk to you about it more. while I wait for him to make some adjustments on that end so that he can continue to have this dialogue. The damage that's being done by the roofers out there right now, not all roofers, by the roofers who are filing these claims, is that what happens is the insurance companies themselves, several of them, and I'll validate this when I get back with Justin, is that several of them are now going out of business. And anytime, we haven't even been hit with a hurricane or anything like that at this point. So anytime that you have this uh, amount of activity prior to a hurricane season, first off, second off, it's on the lines. The numbers he's got on the screen, he'll explain in a second. And you listeners on the radio, he's going to explain this in depth, and they are insane that this has been happening. And, worse than that is we've had the state watching these numbers explode. They're tracking them. They know it's a problem. I should correct myself. They knew it was a problem. They knew it was going to be severe. And right now it's at a severe status because the insurance companies that are folding out there right now were actually staple hold carriers for Allstate and Justin and Hardin Insurance Groups in the past, along with other carriers. So when you have organizations like St. John's going out of business, how does that translate into what you do every day, Justin?
I don't know if you noticed, I was gone there for a second, but
you came back. I had a little dialogue.
So sorry about that. I think I've got that fixed. But at any rate, yes, the fewer you mention, the fewer companies. St. John's going out of business. They were a major piece of what we do on a day-to-day basis. They probably accounted for, I don't know, 30 to 40%, maybe 30, 35% of our new business, and throughout the years, even a greater amount. And I had a very large book with them. We were fortunate that another carrier took a vast majority of their policies because it was looking like we were going to have a few hundred people that we needed to find new insurance for, and they didn't have an option. They had to go somewhere else. So it was a big weight off our shoulders as we care for our customers, because I've been doing this almost 20 years now and haven't had anything like that happen before. I mean, I kid you not, I looked over the sheet of the first month of a list of customers that were getting non-renewed when this first happened before the new company came in to take over policies, and about teared up because I'm sitting there looking at people that I've known for 10, 15, 18 years, that have maybe even been here since we opened our doors. Some of our first customers we wrote them in St. John's, and it was such a stable company that they renewed and renewed and renewed, and they've been in there for 15 plus years. And over that time, I've got to know them, become friends with them, know their whole backstory. And now it's, I'm sitting here feeling what they feel. It's like, man, I've been loyal to this company, and now I'm just getting kicked to the curb. And it's a shame because you mentioned it earlier. The fewer companies we have, you think about all of the homes in Florida need to be insured. So the fewer companies you have, the greater load it is on our carriers. And we have small, typically Florida only insurance companies here that don't have as deep a pockets as the big dogs you typically see. And they're trying to, be prudent and make sure they have enough that when all the storms, storm after storm blows through, that they have enough money to insure all these people. So they can only take so many people, and that's where non-renewals come from. Sometimes if their reserves start taking a hit from all these claims, they have to non-renew people. The only way they can get themselves financially right is to take some risk off the books, because they're sitting there going, we have so many houses insured, and now we used to have this much money, now we only have this much money. We can't insure everything we have now. And so they go to the state and tell them, here, they open up their books and they say, here's what we've got. We need to non-renew X percent of our customers. And the state looks at their numbers and goes, whoa, yeah, you do. We'll approve it. And, here's your, parameters on how you can do this. And it's a random selection process from there. as
So
to why policies get non-renewed.
I'm going to ask a question because this is directly related to consumers' pocketbook.
Yes.
Any time that we lose carriers at the Quality of St. John's, there is a consequence for that, isn't there?
Yeah, huge consequence. They were one of the largest carriers in the state. So if everybody would have got dumped out on the street, so to speak, that would have been a monster problem because, again, they're one of the largest. So all of those people that were with that company would have to find new policies. And then that just stresses the rest of the industry, especially in a time where it's hard enough to find it. If you're just randomly out shopping for homeowners insurance, it's not easy in Florida right now by any stretch of the imagination.
So I want to go to the chart because I think the chart, if people are watching on YouTube, Twitter, Facebook, if you're listening on the radio, please join us on Real Talk 97.5 on Facebook or any of the other outlets, WKDWradio.com. We have all these Facebook streamings going right now, and YouTube and Twitter. The biggest thing in the world right now is the more people in Florida that understand this chart and why this chart is playing a factor in insurance. I'm going to cue that right there for Justin to go ahead and take the hatchet and take the tree down, because right here, this is the nitty gritty truth of what's happening now and what's been happening. So go ahead and explain that chart, Justin.
Okay, I'm going to go through kind of the whole gauntlet of what's going on and where it came from and so on.
Absolutely.
So what's happening a lot of times when these roofing contractors or any contractor can do this, when they come to work on your home for an insurance claim situation, there's a legal document that was designed by the state of Florida called an assignment of benefits. When your contractor gets you to sign that, you as the homeowner and the owner of that insurance policy, you're signing over your ownership and claim rights of that insurance policy to that contractor, and you're basically giving him power of attorney, so to speak, to act on your behalf, kind of become your your mind. They can do whatever they want, and then they can file that into the insurance company. So it gives them a ton of power, and it's gotten way out of control. I'm going to back up real quick though. Why that form? Because you look at it and you go, this is crazy. Why that form was designed originally, unfortunately, from my industry, there were companies out there that wouldn't pay their claims. The only way you could get them to pay was, take them to court. And these contractors were having to just fight and take them to court, and it was taking up a bunch of their time and money. And so it got so bad that customers would have, say, a pipe leak, and a water restoration company comes out and he says, oh yeah, you definitely have an insurance problem here. Who's your insurance carrier? And they say, oh, we've got ABC Insurance Company. And the contractor says, I'm sorry, I can't fix your house. They won't pay me. So it got that bad. So this form was designed that if they could get that customer to sign the form, they could basically take the insurance company to court, and they were going to win every time. It's designed to be a slam dunk when they take the insurance company to court. And then on top of it, since the insurance company was not paying and caused all of this grief, once the insurance company loses in court, they're required to pay all the court fees and all the lawyer fees and so on from the contractor. Well, so that was all designed for a good reason, and then it snowballed out of control. Less than reputable contractors realized we have so much power when we get this document signed that we can do whatever we want. So what we started seeing on the roofs is they would come out, and an example of what I've seen repeatedly here locally, and it actually started more on the East Coast, and then it worked its way over here to the West Coast. But these contractors would get you to sign it, and then they would try to charge the insurance company, say, $50,000 for a shingle roof that should have cost $14,000. When the insurance company says, no, that's a $14,000 roof. We buy roofs every day for our customers. And the contractor waives that assignment of benefits and says, no, this one's going to be $50,000. The insurance companies, I think, have started to just buckle and pay it, because if they try to take them to court, then that's when the big dollars come. And you're kind of seeing that on the top paragraph if you're looking up there. And I didn't realize this for the longest time. I knew we were having the problem with the assignment of benefits and the exaggerated cost of the claims. And I knew that a good number of those claims weren't even legitimate. The roofs weren't damaged by storms. These shady roofing inspectors would go up there and break shingles and stuff and fabricate wind damage. But talking to my sister-in-law, who's a claims adjuster, I said, why are you guys paying this stuff? And she said, we have to. And she said, if we take it to court, we'll end up paying $100,000 to $150,000 in court fees. Plus we have to pay for the $50,000 roof. And now you're sitting there paying out $150,000 to $200,000 on one claim for a $14,000 roof that may or may not have even been a legitimate claim. They may not have been wind damage. It could have been fabricated. And there are legitimate ones that were wind damage. I saw shingles off immediately after the winds we had a few months ago. So there's legitimate ones obviously out there. But that stat at the top, it says fees paid to attorneys by Florida carriers for litigation are on average more than 750% of the damages paid to the insured. So that stat shows you right there that whatever the claim cost was, typically more than 750% on average is what the court costs and the litigation fees that get paid out by these insurance companies are. That really is the larger of the two problems. And then you'll see in the chart, if you can see the stat there, but this about knocked me out of my chair the first time I saw it. If you took all of the lawsuits across the entire country brought against insurance companies, and then you take what percentage of Florida is that large number for the entire country, you would think, okay, we should be around 15% or something, given the size of our state and our population and so on. We're 76% of the entire country's litigation suits brought against insurers. And that's
insane.
Paints a radical picture of how out of control this has gotten. I've seen other charts out there that shows, list 25 law firms and shows, 2016, 17, 18, 19, and how many suits they brought against the carriers, and all of them just were exponentially growing year over year. And it's just flowing out of control with no end in sight. So
real quick, I know that's not just a huge number, that's massive.
Mm-hmm.
Because we're talking about one state on national number. Okay. But prior to that, we were 64%. Then we went to 68%. Then we went to 79%. Right. And now we're at 76%. Well, everybody says we're dropping. Well, we're not dropping. We're way too high to begin with. But the fact of the matter is that every listener in the audience right now that's in the state of Florida is in for a rude awakening when it comes to homeowners insurance rates and changes that this is probably going to dictate.
Correct. Yep. So what we're seeing on the rate increase side, it's like the Wild West. I mean, basically, the insurance companies, there's kind of legalities to how frequently they can file for rate increases and what max amount, what percentages they can file for. There's extenuating circumstances that can cause you to go outside of that, or, there's all kinds of really nitty-gritty rules I won't bore you with. But basically what's happening is pretty much all of the property insurance companies are taking max allowable rate increases at the most frequent intervals possible. And what's crazy is that's usually at least a couple rate increases a year. And the money flowing out the back door from these problems is still flowing out the back faster than they can raise rates legally. So it's a race. There's other things they're doing. Obviously, they aren't just trying to raise rates. They're trying to battle on all fronts, basically. So they all change their underwriting guidelines. So some of them just completely stopped writing new business because they're like, every policy we onboard represents a potential major loss. So we've got to just shut the valve on new business, quit bringing people on. Depending on companies' numbers, they would non-renew, or they would go to the state and say, look, these are problem areas. We're losing our shirts in these areas. We need to non-renew a certain amount of policies in these particular areas. The rate increases, of course. I'm seeing claims getting scrutinized that would not have been scrutinized before. Typically, my carriers do a great job, and if it's, if it's a 50-50 ball, they just pay it, and err on the side of, hey, we just rather make the customer happy and pay our claim and so on. We're seeing them hold their dollar bills a little tighter now, and underwriting wise on new business is super strict. I'm seeing companies ask for all sorts of stuff that they never asked for before. We'll put a policy on the books, and then in the next few weeks, a company has 90 days to underwrite a policy. So they'll look at it and go, all right. They may look at it and think, we really don't want this house. And then they'll be like, let's ask for this, and this. Let's see if we can't find something that we can cancel them out for. And I mean, it sounds awful, but they're trying to really watch what they put on the books, because they are literally all trending towards crashing into the side of the mountain.
Well, and I'm going to ask you this, because the way you just said that, I want to clarify just exactly what you're meaning by the check marks out of where we're at. Right now, you're able to write a house with a 20-year-old roof, but what does that mean if you write it today? What does that mean for the consumer who's purchasing today? Now, you can get it done, and you get a better rate if you replace the roof, obviously. But let's say that we're closing today on a home,
mm-hmm.
and we need to get our insurance policy bound. We got a 20-year roof, and the AC unit is 12 years old, and the hot water heater is 10. Is that something that the insurance company is actually picking and kind of check market and lowering coverage?
Yes. So what you will see, and I'll give a quick history lesson too. So I've got fewer companies now because a bunch of them have dropped off, but traditionally I have about 15, 16 companies I can write homeowners policies through. And when somebody would call me for a quote, I'd plug it in. I have software that goes into all of those companies, and then it throws out a spread of all the quotes back to me. So I go in there, I quote it, and we would have one company that would do it for $850, another would do it for $950, another for $11, then $1,300, then $1,600, $1,900, $2,500, all the way up to $3,800. And we'd kind of look at the $3,800 and be like, whew, like, that's crazy. And we'd throw the $850 quote out there, and that's what the consumer saw. They never saw that huge spread of amongst those companies that were really high were always out there. And what happens is, to your point, the fewer companies out there and the fewer competition, if you don't qualify for all the companies, that's when your rate gets really out of hand, because what ends up happening is, now I throw that quote in there, that house in there that you just described, and I have maybe one of the 15 will take it, rather than before where pretty much all 15 would have taken that house. Well, now I've got one company, and guess who that company is? That's the guy that wants 3,800, because all of the other ones, their rates are lower because they underwrite harder, and they try to keep their books really clean to keep their losses low, to keep their rates low. It's a full circle process, cyclical deal. But on top of only qualifying for one company, we're completely at the mercy of whatever that company wants for the coverage, and we're completely at the mercy of what coverage options they're going to throw out there. So oftentimes we'll either see actual cash value on the roof, and what that means in English is there's really two types of coverage that we utilize. There's replacement cost coverage and actual cash value coverage. Replacement cost is, we're going to pay whatever it costs to put a new roof on, or whatever it may be, fix whatever it is with new stuff, minus your deductible. Actual cash value is like a pro rata type, like a tire warranty almost, if you think about it that way, but basically saying you have a 20-year lifespan roof, and we're 19.5 years into this thing. You do the math, like you're not going to get paid a lot on there. So yeah, we might have a carrier that'll do it, and it's a little goofy. They're basically just getting out of covering the roof because they know that it's just ready to be claimed basically. So they'll say we're going to do actual cash value, or I'm going to get this wrong, it's something crazy like a $15,000 deductible, which completely eliminates the roof right there. So you get to choose one of those two options. So we always choose actual cash value on the roof, because that way if they have a claim on anything else, they aren't hitting with this huge deductible.
Right. Oh, and I'm going to go here for a second. I want to stay on task with that, because one, we're in a market now that is really tough to buy in. First off, for anybody out there. Second off, we're selling really not your typical 10 years left on the roof. We're selling inside of 3 or worse. And because the market is dictating all these things to the buyer, and the sellers are putting them on the market, and God bless them, they're getting the number. Okay. They're it is that, it's that moment in time. There's 2 things that I want to point out, is that we haven't talked about COVID, and we haven't talked about the market. What we're talking about is consumer and business, roofing businesses exploiting this and damaging everyone else in the state. Because I will promise you, there's customers out there right now that know their roof is 20 years old, it's at the end of life, and their statements are pretty simple. What's it matter? Well, in the grand scheme of things, put it in English for people to understand that if there's no business, what happens?
Oh, me? Sorry, yeah. I thought you were going into that. Yeah, no, I mean, if we, as we drop these insurance companies, the rates, the strain on the companies that are left goes higher and higher, and it could literally downward spiral to where it brings them all to their knees. I mean, it's that. I never thought I would even think of something like that, because all of us, I think, are guilty of thinking, oh, these are these companies and they've got endless money, there's zeros for infinity on their bank account, but it's not true, especially of the Florida carriers. So some other things that are going on, though, the companies are trying to change some things, because we haven't got any litigation or any law changes with regard to the litigation and other things that are going on. So they haven't received anything from our politicians as far as helping them out and working on this. They're supposedly working on it now, which I'm cautiously optimistic that something good will come of that, which would be excellent. But what to John's point, we're going to see insurance policies change. The insurance department controls a lot of this, because they won't. Anytime a company wants to change the way their policy's worded or anything like that, they have to go to the Florida Insurance Department and say, hey, here's what we want to do, and here's why. Then they launch a big study into all of it, and ultimately, these companies keep running into brick walls there. Right now, the insurance department's so used to. And us and me and everybody, we're used to having these Cadillac insurance policies. We really do traditionally have a very, very favorable homeowners insurance policy in Florida. And they're so used to that, and so used to companies not trying to alter their wording for the worse, where it hurts the consumer. But that's where we're at. But they're declining all of these, and it's causing even more strain, because it's disallowing the insurance companies to protect themselves. Because some things, I was telling John earlier that one of my carriers was talking about doing a roof schedule, which I thought was fair given the circumstances. Unfortunately, what these scammers are doing is impacting all of us, me included, and all my customers in a negative way. Like John said, not only with rate increases, but I think we're going to come away with lesser of an insurance policy. But like a roof schedule, for example, would kind of be like actual cash value, but they might say, well, you have replacement costs for the first 10 years of your roof, and then the back 10 years, we're going to put a little chart in your policy and say, when your roof's 11 years old, here's how much we'll pay for it. When it's 12 years old, here's how much we'll pay for it. And then that mitigates the the cost. We can't get a roofer coming in here charging $50,000 when it clearly says in black and white the insurance company, when my roof's 12 years old, is only going to pay $12,000 for this particular roof. Well, if that's the case, the homeowner's not going to pick a roofer that's going to charge $50,000, and that guy's going to have to get lost. We're going to go get a reputable guy that's going to do it for, 14 or 15 or whatever the roofs are going for at that point. And yeah, the insurance is going to have maybe their deductible, but then they'll get 12 from the insurance company and have to pay the other couple hundred or a couple grand to the roofer in that circumstance. And then the longer the time goes on, the more risk gets put down onto the homeowner as the insurance company dwindles down how much they would pay. So that's an idea that's out there, but to my knowledge, it hasn't been approved by the insurance department yet or not. So nobody's been able to put anything into play like that.
So with all this being said, and with all these numbers being thrown, and we do have citizens that are paying attention right now, they're listening. I hope they're going to share this video, because this is critical to any homeowner or possible future homeowner in the state of Florida. This is actually really critical for other realtors to understand and know, because we're supposed to be educating the consumer. I know you're doing a really good job with your organization trying to get the word out. And of course, when you get hit with a carrier that leaves, you absolutely go into scramble mode to try to find the carrier and try to find the correction. We've had in the past we've had situations where we've lost. Allstate, one of them, State Farm at one point gone, because we had crisscrossing hurricanes, and that caused traumatic spending through a lot of those accounts because of the damage that incurred with not just one, not just two, but maybe five crisscrossing hurricanes in the state of Florida. We're not even talking right now, and I did want to hit that we are going in to hurricane season.
Yep, June 1.
I can't imagine going into hurricane season with this turmoil right here affecting our market in such a negative manner. It may wipe out, if we have anything like we did before.
I don't even want to think about it.
Every insurance carrier known to man in the state of Florida, if we have a crisscrossing hurricane that destroys and does damage to any significance at all, it's going to wipe them out.
Yeah, I would, hopefully all of our carriers have reinsurance for that circumstance. So, but a storm will not be a good thing, especially a big, Irma type event would be just horrific here in the next year or two. Would not be good at all. There is some positive news out there, though, so we're not all doom and gloom. Allstate is actually taking on some homes and condos. They're pretty open on condos, and they've got an excellent policy, actually probably the best policy you can buy, and the rates are competitive on top of that, so it's a win-win. And then
I want to stop right there, because we've had this discussion in the past, you and I both, because I've got a villa, and can you explain why there's differences between the Allstate policy now that was created specifically for this versus the others that are out there?
Yeah, so when Irma came through, it caused some issues with condo associations across the state. I'll try to keep this as brief as possible, but essentially what occurred, there's a bunch of condo associations that bylaws read, well, they're actually homeowners associations, but their bylaws read in the insurance section like a condo association. Somewhere along the line, one of those contracts got, I think, messed up personally, and then it just got replicated over and over. So there's a good number of homeowners associations across the country or across the state that insure as condo associations, and it's worked fairly well throughout the years until Irma came through. And what happened to a good number of places that took substantial damage when they went to file? So a condo, I'll back up just a little bit, the master association policy, which the association buys, it covers the main structure. And then if, say, the whole place blows away, the condo master association policy would rebuild the building, and then each unit owner would have basically a blank slate inside, bare drywall, bare floor, and then their condo insurance policy would rebuild out the interior of the condo. Some of those master association policies, when they were faced with these multi-million-dollar claims to rebuild all these condo buildings, got to looking at them, and they said, wait a minute, you're a homeowners association. Why did you insure this with a condo master association policy? This isn't a legit contract from the get-go. We can't place a master association policy on a homeowners association to cover all the buildings. We're going to nullify this whole contract, give you your premium back, and you're done. No coverage. Then that left all the homeowners, where they have these small amount of building coverage, to try and rebuild the whole ball of wax. The individual owners' policies got sued, and they ended up having to pay. Somebody might have only had $50,000 in coverage for the build out of the interior, and it was going to cost $150, $200 to rebuild their whole piece of the building, and the insurance companies were having to pay that. The individual unit owners' policies were having to pay that. So that created a big problem in itself. So a lot of individual companies won't write condo policies in those circumstances again, and now you have overlapping coverage because you have people having to buy homeowners policies, insuring their whole piece of the structure, and the master association policy is still on there. So all that being said, it's a brand new policy that Allstate came out with a couple of years ago. They've addressed some of those issues, and they will go beyond the drywall in a lot of circumstances, and do things that the traditional condo policy is not geared to do at all. So, and it'll go and meet wherever it needs to meet to meet up with where the master association policy left off, or if it didn't cover it all. It seems to me that ours would do what it could within its policy limits to rebuild the whole structure. So that's just one case. There's another side coverage on that policy too, that kind of reaches out and will cover things that behind the walls that a traditional condo policy would not cover as well, which can kind of, in a small claim situation, can really make things easier, because that master policy may have a very large deductible, and if you have $5,000 in damage behind the walls that's on the condo association that your individual unit owner's policy won't pay for, it wouldn't even hit the deductible, and now the association's out $5,000, whereas the Allstate policy just says, no, we're not even going to bother with that. We'll pay that $5,000 worth of stuff, and we don't even need to deal with the other policy. So it's pretty cool.
Well, and I will say this, the way you explained it was really in detail, but very simply put, is that Allstate actually stepped back and dissected the master policy,
mm-hmm.
and said, well, here's where their policy stops and here's where we begin. And they really dissected it, and I don't want to say personalized it, but it kind of did for the condo associations and owners in those associations. They really set this up for the consumer to have the proper policy. They may have a current condo policy, but are there, that you know of, besides the one that Allstate has, is there anyone doing it that's dissected it like Allstate has?
Not that I'm aware of, no, because I have a bunch of other companies I can write condos with, and none of them do that kind of stuff. I was kind of thrilled to find out, because it's just like you said, there's an issue. It's not always an issue, but there's a repetitive issue there. The policies are supposed to, I always say, plug together like Legos between the master association and the condo. And there is a very well-defined line between those two policies, and it works a vast majority of the time. So, but there was a mild repetitive issue out there that when they called it I forget what they called it, some sort of modernized contract, I think is what they called it. But essentially they just put provisions in there that allowed coverages to reach out and do things that they the verbiage in the older policies were restrictive and didn't allow them to do. So they just kind of opened it up a little bit to make things go smoother when those repetitive situations that can be a headache, rear their head.
So does that I know it covers villa, it covers condo. Does it also work with the townhome?
Are you talking about in your community or just
In general? If people
okay?
had
Well,
a villa, not just mine. I know that I know where that was really originated from. But if they were to call you today and they had a condo or villa or townhome elsewhere in the surrounding area that you cover, is that policy a better policy than probably one they have currently?
yeah, if they have a condo insurance policy, I would say yes. And the cool thing about that is we know they're very financially stable and so on. And given the turmoil in the market right now, that's a super positive thing that Allstate's taken on new business right now. But to your point about if they have condo insurance now, that's probably what they need to have. Yes, that would be the policy for them. And yes, this one would likely have better verbiage behind it. But each one of those associations can choose to insure differently. It depends on how their bylaws read and how the insurance contracts work for that particular association. So you could have townhomes that they need a homeowner. Each unit owner needs a homeowner's policy, and they're responsible for their entire piece of the building. Or you could have townhomes that have a master association policy, and the unit owner is only responsible for the interior build out, just like a condo. So they can be structured either way on a lot of these things. So
is Allstate since they did this one program right here, I know that was a big ordeal to go through it, but let's say that you had customers at other places. Are they going to be able to quickly dissect and then ramp up a program for other associations based on that?
The issue that you guys have is this exact same as the other ones. Like, so there's other condo associations that have the exact same bylaw verbiage that you guys do, and that's what caused the problem when Irma came through. So that situation is literally the exact same. So yeah, it would address those situations with other associations also.
So would you say that right now, because maybe Irma didn't cause the damage to a lot of the area that could have occurred, but would you say that there are a lot of people within our range of coverage are right now feeling really good about their coverage because they haven't been exploited to any significant damage yet, and they don't know the end result of what's going to happen to them?
Yeah, they very well could be. And I know, when you're outside of the insurance industry, my hope always is my customers are buying a policy that they're educated and making the appropriate decisions at the time of purchase, and then we review them going forward as they'll allow us. So some people want to do it all the time. Some people don't want to talk to us at all. But at least when we set it up, that they know what they're getting into. But there are a lot of people that don't have that conversation, a lot of agents that don't have that conversation, and the customer might think they have what they need, and they really don't have a clue what they have, and they may not. It's definitely a good time of year to be looking over your insurance and making sure you know what your deductibles are, making sure you're reading not just the coverages on the front page where it says what your dwelling limit and your personal property limit and deductibles are. Below that is the endorsements section. You'll see optional endorsements, and that could be, you can have endorsements that exclude things out, and you can have endorsements that better the policy, like personal property replacement costs. That makes sure it's going to buy you all, like quality new stuff rather than depreciate all your personal property if you don't have that. You might see in the endorsements water damage exclusion. That's a big problem because number one, aside from before all this roof stuff came about, by far the number one claim is water damage. A pipe breaks, a roof leaks, an appliance leaks, something like that. There's water all throughout the house. So that's by far the number one claim. and you could literally have that completely excluded. I've had people walk out the door, run a couple errands, come back, and there's $80,000 in damage to their house because a pipe busted open while they were gone, and waterfall comes out the door when they open it. So um, you really don't want to have water damage exclusion if you can help it. You don't want to have limited water damage, but that's something the companies are doing too with this roof stuff. They're limiting water damage and so on because, yeah, they may not cover the roof, but then the water that comes through the roof and damages everything else typically is covered. But that's some other negative ramifications of what's going on here as well. Some of these homes, yeah, we can get you insured, but your roof's not covered very well, and you either have no water damage or you have maximum of 10,000 and that's it. So those policies make me very nervous. I'm dead honest.
Well, and we're the end result of this, and I've used this for multiple things. Anytime that you push a marketplace one way too far, there's always a boomerang effect. And the boomerang effect is coming. That boomerang has been thrown now for 5-6 years, and the guy throwing the boomerang is getting better. He's going to catch it, and that's why they're behind the walls right now talking in legislation. Is that all this goes on, and the fact that the boomerang effect to the consumer is going to be higher rates, less coverage, and less options for coverage. And with all that being said, we only have a few minutes left, but can you give your contact information? Because the truth of the matter is if you're a condo, a townhouse, or a villa owner, if you're not talking to Justin, you probably don't have enough coverage, and we're heading into hurricane season, and you don't want to wait until it's in the water, because once it's in the water, you ain't writing any new policies, and that's just real talk. So go ahead and give your contact information.
Yeah, we're here in Northport, 2559 North Toledo Blade, between Price and I-75, and our phone number is 941-240-8982. You can email me as well. It's my first and last name, so it's justinbox@allstate.com, and my last name is spelled BOX, just like a cardboard box.
Well, awesome. Here's the thing, Justin. If the listeners out here today, I encourage you to share this. It's great information. It is affecting anyone in the Florida region. So if you've got friends in the Panhandle, get them to listen to the show, get them to call their agent, get them to get educated on what they currently have and the effects of what is playing out in the market now with the roofers that are going around and telling you, the consumer, we can handle this. And that form, what's that form again that you were talking about? Because we got fresh listeners listening in, and we only got a couple minutes. But the form that really kind of takes their rights and exploits it is what?
That's called the assignment of benefits. We call it an AOB, but that's that legal document that a contractor can get you to sign, and you're literally signing your claims rights over to them, and then they have a license to really take the insurance company to the cleaners and cause all kinds of litigation costs and so on. So there are some legitimate reasons. We don't have enough time to get into that. There are some legitimate reasons to sign an AOB, and if you're dealing with somebody reputable, it can actually be a good thing. This is what's so frustrating, is it was designed to serve a good purpose, and now it's just taken way too out of control, and it's causing everybody's insurance get messed up. And just so people know, it's not uncommon that we're reviewing policies and they're up 800, 1,000, 1,500. So just so people know.
So Justin, we're definitely going to have you back on. We're going to talk about more things. We got hurricane season coming in, and I promised you we would talk about that. But I believe that this is more important right now because we're not at hurricane season yet. We got time to get you back on and talk more about this and other topics. And I hope you guys enjoyed it. Have a great Friday. Justin, thank you for the hour. I really appreciate it. I think the consumers all need to know this. And God bless you and have a great weekend. And Northport, be safe. be sound, and just slow down on 75 and get home safe. We'll talk to you on Monday. Justin, thank you very much. I appreciate it, buddy.
Yep. Thanks for having me.
All right, bud. Talk to you soon.
Yep. We'll see you.